Hello and you're very welcome to this video. This is our 10th video in this series on insurance for junior cycle business studies. What we're going to learn about in this video is we're going to look about how you go about making a claim if you've suffered a loss, and we're going to look at what the term average clause means and look at the formula for calculating average clause. So, if you're unfortunate enough to suffer a loss, so say for example you have to make a claim on your insurance, so if let's say you get robbed, you might have to make a claim on your contents insurance, or if your house burns down, you might have to make a claim on your actual physical buildings insurance, or if let's say for example you crash your car and you have to make a claim on your car insurance, what do you do to make a claim? Well, you need to go and talk to your insurance company and you'll have to fill in what's called an insurance claim form. This form basically collects a lot of information about what's after happening. It needs information about the policyholder, so the person that's being insured, the loss that has been incurred, so what's actually happened, why are you having to claim this, how much the value of what you're looking to get claimed. Is the item insured a complete write-off and needs to be fully replaced? Is it only a partial loss that's been that's happened? So is the case is it only needing repair? So for example, if you had mobile phone insurance and let's say your screen's cracked, well, you don't need a brand new phone for that. You just need to be reimbursed for your screen being repaired, or is your phone being stolen? In which case you need to get the full phone replaced. So that's about making a claim. Now we're going to look at the idea of average clause. So sometimes people will underinsure something or the item that they're looking to insure. What that basically means is they're not insuring the item for its full value. So let's say, for example, I've got a phone that's worth €500. Well, I might only insure it for the value of, say, €400. That means that if I lose my phone or it gets stolen or whatever, then the insurance company will only compensate me for €400. That means I'm actually losing out on €100. So, in order, what has to be done now, you have to calculate how much compensation will be paid if the principle of average clause is used, and that's what we're going to look at now. So firstly though is a definition of what average clause is. So your textbook definition, as they say, is average clause is used to calculate how much compensation will be paid to the insured person if they have not insured the item for the full value. The formula for average clause is the amount insured over the actual value multiplied by the loss. So the amount insured is basically how much you've insured the item for, over the actual value, as in what's the product actually worth, multiplied by the loss, multiplied by how much of damage that actually happened. So that loss could be the full amount, so let's say, or it could only be a partial amount. In the next video, which is linked in the top right corner there now of the video, we're going to do a fully worked example of average clause. Well, that's it for this video, folks. If you have any questions, ask below in the comments. If you enjoyed the video, give it a like, and why not subscribe to the channel. Thanks very much for watching. See you in the next video. Bye.